Good afternoon, everyone. Welcome to the Show Me How podcast. We look a little different today. John, where are you?
Good morning, good afternoon, good night, wherever you are watching this episode 17 podcast, communicating to you live from Door County on our first remote episode. Yes, where Stephanie grew up. I'm with her brother here. We're taking down trees. I'm being a lumberjack.
Nice.
Yes, nice. I have some good videos we'll post up to the website eventually here. Fortunately, Grizzly's not here with me this week. We gave him a break from Zeus, who is the never-ending, pestering Rottweiler that Dean has.
So you didn't bring Grizzly?
No, they fought at least seven times last time.
And then Grizzly had injuries too, right?
In his face. He bit Zeus on the leg. Zeus is limping around. So these guys are getting into fights constantly. And I just, there's other people up here. There's other guests. I didn't want to make it into a big saga of dog fights.
So Grizzly's at home terrorizing Brett.
He is, yes. He's not. But Grizzly's fine at home. It's him dealing with Zeus that's an issue, or other dogs. Grizzly is very, very sweet. He loves
Grizzly's definitely the alpha dog, and as you guys know, we post videos of Grizzly on the website, and he is got a wanted poster at Horner Park. Because he humps or attacks the dogs in Horner Park.
He also walks in the nature preserve where they don't want animals.
Nature preserve, and all the
nature preserve with no
tree
animals.
Huggers get a little upset at that.
Oh my God! There's a guy walking through there with Grizzly the other day. He's like, "Hey, I just want to tell you, your dog really is not allowed to tear." And then there's a spider, and I kind of swapped it. I go, "Oh, no spiders either. Gotta keep spiders out. Squirrels. Gotta keep all the animals out of the nature preserve." Meanwhile, this thing's grown gangbusters in 7 years, and the do-gooders continue to do bad.
I don't understand them, but we're gonna let that go. So, John, what are we gonna talk about today?
This is episode 17. High rates, high rents is what we're talking about. So, this is a great episode for residential investors. We're going to talk about investment strategies and the high rate environment and how it's impacting the cost of homes as well, because there's lower availability in the marketplace. So we'll get through that. So this is a good episode for renters, buyers, small scale investors.
And how we don't think that, or from our research, sitting on the sidelines and waiting for the rates to come down is not a good strategy.
No, exactly. I mean, so yes, when you're looking at mortgages today, you need a spreadsheet. Because I'm a spreadsheet guy. And
of course you are.
A stiff drink as you go through this, because the rates
are you going to share high. That on the website, your spreadsheet?
Well, we've already shared plenty of these spreadsheets, but yes, there's one out there for you, and you'll be able to get it off our website to help you kind of figure out how much you're going to be paying for these crazy loans nowadays. And you can mix your own drink though. So, we can't provide the alcohol, Stephanie.
Well, one of the things that we talked about is like the 30-year fixed interest rate is, and I was looking at this, is 6.58%, right? So
yes, as of
compared to 2.99 or 3, it seems expensive, but really, is it that expensive in the retrospect of the 70s of 17% and all the interest rates in the, as we look back? Yes, it's more than 5 years ago, but in the history of mortgages, is it that out of whack?
Well, I'd say it's a crime scene. Either way, that 17% was robbing our parents. You and I and our production staff, Mike and Matt, are much more sophisticated. We're not going to put up with that bullshit anymore. Jerome Powell, the Fed, they're criminals. They're stealing from the American people. We're exposing this now to come out and stop it. We shouldn't be paying interest rates on our own money. It's ludicrous. The IRS is a scam. So, we're gonna dial this all back, and we're gonna keep these interest rates at reasonable levels. We're not going to allow them to steal money from us and let the bankers take it from us anymore. We're going to get those rates back under control, which we're working on now. and we're going to, make it so it's a glorious time to live in America and the world, by giving rates that are back in the 3s and 2s, and maybe even better than that. So we'll see. National rents are up right now 2.9% year over year. So, while the interest rates are up for buying, the rents are going up too. So if you have a property that's a multifamily like I do, and your brother does, and I don't think you do yet, Stephanie, but you will. It's a great situation because not great. It's a good situation because you're making more money. I don't like having to raise the rent on my tenants. They're nice people, but I do have to keep up with it because not only is inflation going up. So the cost, I had to do repairs recently to one of my units. It cost a lot of money, but also the taxes. We have this knucklehead Brandon Johnson. Hopefully he'll be in prison soon. But we have these terrible people that are raising interest rates. The guy raised our debt $1 billion in Chicago, and I'm sure this is going on around the nation. And then he went to go ask for money at Congress to help Chicago, and they're interviewing him. They go, "What did you spend the $1 billion on?" It was illegal immigration. So $1 billion, and now he's coming to the people of Chicago that own property there and trying to raise our taxes $1 billion to cover that. It's just insane.
Right. So and he's also asking, Illinois is more than Chicago, and he's asking downstaters to pay for our debt, and they're no, we're not doing that.
We're not doing that. We didn't tell you to spend $1 billion on this. And I'm sure he's getting kickbacks and, all kinds of stuff. All his buddies.
We don't know that. That's just, I'm sure we have no idea.
Did I say I know it? No.
No.
I said, I'm sure he is, though.
Right.
But anyway.
We're not sure he is. We don't know.
I'm pretty sure.
Anyway. But back to our...
we've seen the demon rats and how they behave. Anyway, so let's move on to the myth of the week.
The myth of the week, what is it?
Equal cheaper homes, right? Is that true?
No.
Why not?
Lower rates fuel demand. Prices climb unless supply expands. So what we're seeing right now is higher rates, interest rates, and lower demand. Higher demand and lower supply because people are not willing to give up those. Bless you. Bless you.
Yeah,
give up those 2.99% interest rates. So,
or 3.5,
as I said to you, we were talking earlier, that's a great interest rate. But if you have a 5,000 square foot house, you're an empty nester and there's two of you in there and you're paying $24,000 and $1,000 in taxes. And you have this big house with fuel costs and air conditioning, electric costs and all that stuff. If you do the math, the 6.58% interest rate is not a bad deal when you you're downsizing, you're making some money on the house that you've had for 30 years and you're going into a situation that's much more manageable. So I think that people have to look at the bigger scope of it, not just, the rates are higher. Well, what are you paying for besides the rates? As we talked about.
Great point. You have to look at all the details, right? It's not just a few things we'll talk about here, but it's, HVAC costs have risen, according to one of our good trusted friends in that business, 100%. They've gone up 100% since 2020. 100.
Yeah.
There's no reason for that. That's, we'll get that under wraps. But in the meantime, if you have this giant house with 4, 5, 6 units in it, then you got to keep them running to keep it comfortable. It's
exactly
an expense. So you got to look at everything relative to your situation. Are your children gone most of the time now? Should we move into something that's more reasonable? While we get through this transition to a better world that we're working on right now. So
and also did you move there for the schools for your kids? Are you using the schools? No, but everything costs something. So I think our listeners, we're just trying to do is just because it's a lower rate doesn't mean it's a better deal, right?
No. That's very true. Or because it's a higher rate doesn't make it a bad deal. So you got to look at it from both perspectives. So
exactly.
So, we want to hear from our listeners, though. Yeah, sorry, go ahead.
Right. We'd love to hear from you. And like you said, if you get a higher rate now, you could always refinance. It's not like
Yes,
you're stuck at
absolutely.
that. You don't have
I
to
mean,
keep it.
there's a cost to it, but versus all those other expenses, it's
Right.
hardly anything, right? So, and again, we do want to hear from the listeners. What's your situation? What are your stories? Did your rent get raised this year? So email us or DM us, Stephanie.
Yeah. Oh, yeah. John, DM, right? You're going to explain that again? Okay.
Yes,
Um,
direct message on Instagram or
right.
Facebook.
Facebook.
Yeah.
So what are we going to be looking at?
Uh, Give me some more context there. Looking at in regards to what?
What's our preview? We'll be defining lock-ins, reviewing the data, giving
Oh, what we're
strategies.
coming up to. Yeah, we're going into the deeper into the session. So we'll talk more about what the lock-ins look like. What do those mean for people? And strategies that we're going to give you for getting around those challenges. Basically, what we just talked about, a little different context. We'll give a little story. Some of the data sources I wanted to share with you are, use locations like Freddie Mac to get your weekly mortgage rates. That's what we use today. We also use CoreLogic for rent growth. I like to use real data from where I am from apartments.com. So that's a great place to use. So if you have another
Yeah.
resource different than them, use that to figure out what your rents are. I do that for my tenants. I'm like, well, look, here's $2,500 for this apartment right two doors over. So this isn't an unreasonable rent for the neighborhood. And so I use that. Census data is also helpful, and that gives you builder activity. So it'll show you what parts of the state or country are growing. So if you want to invest outside of your area, like if you're planning
Yeah.
on retiring in Florida or something like that, it's a great opportunity for you to go there and take a look and see if that might be a place where you want to build because you're seeing a lot of movement activity, things like
Right.
that. So
Right.
right now we're
So,
seeing builders slowing,
yeah.
builders start slowing. So that's even more challenging. It's going to put more pressure on the market and increase rates, costs even more for those houses and condos. So right now they're at about 939,000 starts, and usually we're well over a million. And this is as recent as July 2025. So
Exactly.
also insurance is spiking in the Midwest area because of storms. So we're
Right.
having increased costs there as well. I know my taxes and my insurance went up this year. And then tariffs on lumber and steel are raising our costs too. So
Right.
each tightens the supply and raises expenses. Fuel seems to be coming down, which is helpful.
Yeah.
That can add to the cost of everything too, and that's actually fundamentally what they claimed led to our inflation under the last administration. But who owns the oil? It's like the people own the oil. We're supposed to be selling it to these entities like BP Amoco. Somehow that doesn't quite happen, and then they artificially raise these rates, which raises all the costs of everything because petroleum makes a lot of different items, but
Right.
also it costs more money to ship the drywall and the plywood. It costs more to run the chainsaws, etc., when the fuel prices have gone up. So just something to think about there as we get through this tariff. I think there's going to be a bump in the tariffs. Initially, it's going to be a little painful, but then I think it's going to settle down. And apparently, we're bringing in record amounts of money. And now I love having an external revenue source instead of an internal revenue source. I'm sure everybody, well, people that are apparently aware of financial markets understand why that's such a good thing for us. So, and that's the way we used to be. We always used to have external revenue, not internal. So we're just moving back to the good old days when America was at its richest.
Yeah. With change,
And
there's always a little pain, but it could be good.
yeah, there's transition moments where you have pain always. So let's talk a little bit about how a scenario where somebody's getting hit. Why don't you read this one off and take it to the bank, Stephanie, for us?
Um, when the Are we doing
So
Angela?
that no, we're talking about tools and flags. I'll talk about it. So Marcus, we have another case study here. A gentleman named Marcus. He's an IT worker. He's in Phoenix. he bought a place at 3.25% in 2020, and he can't sell it profitably.
Right.
It's not going to work out because his place wasn't really in the greatest shape. He isn't getting the huge value out of it. And if he sells it, he's down 3% on a swap. Unless he goes to rent, he's going to have a 6%, 6.25, 6.5 almost percent interest rate. So as we looked at with that story from Angela, it was $800 more a month. So this is a problem and a challenge, but if you just turn the story a little bit, Marcus, instead of looking to sell his place, rents a townhome. Maybe he had to move or something like that came up, or he wanted to move or moved in with a girlfriend or something to that effect. And now he could still do that and rent his house. And looking at the value he bought it at in 2020, with the interest rate he's at, he'll end up coming away with about a $500 a month profit. So, on top of insurance and taxes. So
Exactly.
That's a great scenario. And you end up looking at it, you're like, wow, I had no idea. Yeah. Now you're splitting your rent with a roommate or a girlfriend or whatever, and now you're making more money off the place that you were living before. You're not in this debt as much, and you're coming out of this deal in a great way. So it's terrific.
Right. Yeah, that's great. And what are some of the warning signs that we could do for our audience to kind of have them playing offense instead of defense only?
Well, I mean, look at the options that you have. So are the interest rates stuck? Is the supply low? What's the rental market like currently? These are all things that you have to look at, and it's all relative to the moment that you're in the market. You could look at it today with all the stuff we're giving you, but it doesn't matter. That's why we try and update you each session, because the rates in a month are going to be very different than they are right now. So you got to look at it. And also the market's lags. So the rental market might get worse. It might get more expensive. And then that changes the scenario. Now I don't want to sell my house and move because, or I'm sorry, maybe I do want to sell my house. I'm sorry, I don't want to sell my house. I want to lease it because I can make so much more. Maybe, Marcus ends up making $1,000 a month on his house.
Right.
So, you have to look at all the facts at the moment that you're in it, and you should update them while you're shopping for a house or for your new situation to try and figure it out. Numbers keep moving daily, minutely, right? By the minute, by the hour, by the day. So you got to check in to see what there are and look at the trends. Where are they going? We're trying to give you those so that we can give you some direction. We're not financial analysts or planners, but we try and give you information so you can make good decisions.
Right.
So that's just, I think, a good.
And as I said to you earlier, July was a record month. I think I don't have since when, but that home sales fell through. Like they didn't happen. So, I don't know if it was cold feet or people got, they didn't want to do it. So I think also as a seller, these unrealistic prices that were out there for the last 2.5, 3 years are starting to be realized, right? They're not going to just jump into something and pay crazy rates or crazy amount and then not get cold feet and jump out, Yeah,
exactly. Good point. I mean, as the market shifts, you got to adapt.
Yeah.
And what was good yesterday might not be good tomorrow. So you need to make the adjustments for what your personal situation is, as well as the reality of the marketplace. So,
right. And as you said, looking at it from a perspective of, okay, what does the rental market look like today? What it will look like next year? What will it look like in 3 years and 5 years? Right. So if you're looking at something that, rents for $1,800 now, well, in 3 years from now, it might rent for $2,800, so right. You're kind of hedging your bet on the future rather than staying still in the what's happening today. You're going to say, okay, this is where I see the trend going. And that's what we're trying to give you the tools to understand that there is opportunity out there. It's just a matter of honing in the right opportunity.
Yeah, exactly. And we're going to give you another example right here now. So one of the key terms to understand is called like 2-to-1 buy down, where the rate drops 2% in year one and 1% in year two. So a little house hacking tip, as we like to call it: rent part of the property out, and then your debt to income ratio could help impact. As the market changes, the banks look for a different ratios
Yeah,
for you to be able to qualify for a particular loan. So the debt to
exactly.
income ratio, or people are looking for a lender's cap rate of about 43%. So, if 43% of your income or less is going towards you covering that mortgage, then you have a higher probability of getting a loan and getting a better rate. So, give an example of John in Atlanta, 24-month lease with 3% cap rate, whereas Maria's in Denver and she moves 10 minutes out, but she saves $400 a month on her rent. So
Right.
making these decisions that impact you and make your financial welfare better off, so that you can plan for the future better and leverage your money better when the time is right, you can strike. Another example of this guy in Detroit, Daniel, let's call him. He has a duplex tenant in his unit, and the person's covering 45% of his mortgage. So he gets, the lion's share of the property, and somebody's paying half his mortgage.
Exactly. And in Chicago, we look at, like the hot areas like River North, Fulton Market District, and you see some of these rents are $5,000 a month for a 2-bedroom apartment. And yeah, it's fun to live over there and great for the, the landlord, but how is that ever going to get you in a position where you can buy something? You got to look at these costs. Like, what am I doing? What do I get for $5,000? A swimming pool? Well, go to the Y, like
Exactly.
Really?
And like you said, don't wait.
Right.
If your life is saying you need to move now, just find a way to do it. Don't wait. Structure a deal that gives you the ability to be flexible and be creative. And, that beats patience in today's market. Creativity, because it's been stagnant for so long. If you're sitting around waiting for this market to turn, and, there's a war going on between different people and different perspectives in our society. It's a political war. It's elite versus sovereign war, and these people are fighting each other. And Biden does one thing, Trump does another thing, et cetera, et cetera. These people are going back and forth, and if you sit around to wait for them to finish their battle, you're going to end up missing great opportunities.
Exactly.
You got to move no matter what, and you have to leverage the opportunities that are in front of you right now, and just do your best. Also, don't take your eye off the ball. So, because things will shift really badly, and maybe the bad guys will get back in control, and they'll increase our interest rates more, and do other terrible things. And then you're going to want to figure out, what do I do? What's our
and I think also, and we talk about this, and I think it's so true, because we both have kids in this 20-something age bracket. And, your expenses of Starbucks and the $20 drinks and all these things add up, like the Ubers, and people don't
Uber is probably crazy.
I know.
And I used to go to Starbucks every day. And then, when I wanted to get out and become flexible in my life and not work for the band corporations, I was looking at it, I'm like, now it's probably $60, $70 a week for that kind of habit.
And think about, like, all those drinks you look up on the board. And when I go to Starbucks, I just get coffee. But when you look up on the board and you see a drink for $10, you're like, what? No. And it's a sugar drink that's going to give you a sugar buzz. Probably you'll gain 5 pounds from it, and you'll be, less in the hole. But what you have to do in this market especially is be strategic. And like you said, be able to make a move. And when you're have more money going out than coming in, that's a problem. So just
Yeah,
think about that. Make some moves now to put yourself in a position where you'll be able to jump on something when it comes up.
exactly. And again, on this point, we'd love to get some of your hacks out there. Audience members, please send us your
Yeah,
emails and tell us about what you've done and what cutbacks you may have made that ended up being brilliant little situations for you. I hate to say this, but doing things smartly on your own, and changing your air filters, and you know, fixing a broken window or something like that on your own. That's not too difficult. Maybe that's a smart thing to do when you're in this kind of situation.
right. Exactly. Exactly. And what, as a homeowner, you can do, something I'm doing right now is the driveway in my house was a disaster and the garage floor was disaster. Well, it makes sense, I have a little bit extra money now and I could fix that, but I'm not just fixing it the way it was. I'm widening the driveway. I'm making it more strategic so you can park two cars. So think through what you're doing. Don't just say, "Oh, I'm going to put a new driveway in." Well, what are you going to
Sure.
do to make it much more, um, instead of
Value
building
add.
a two car
Value
garage,
add.
I have
Yeah.
an extra spot where you could park a car, but I didn't have to build an extra part of the garage. You know what I
Right.
mean? So think of different ways of putting your money into the house that you have and reinvesting in it to make it more valuable too.
Right. And bathrooms, kitchens, things like that, where you're going
Yeah.
to get a lot of value out of it. Change faucets and things like that that'll end up being very attractive.
Right. Things you could do that isn't a ton of money, but adds value to your home already.
Right.
And don't, like you said, if you have a little extra money, invest in yourself and your property. So, what can go wrong, John?
Well, we were just talking about a little bit, referring into this again, betting on lower rates
Right.
risks you overextending and waiting for something that may never come.
Right.
Ignoring insurance and maintenance costs also is another surprise component that owners end up falling into, and taxes, by the way. So when you
Right.
purchase a place, condo or home, those taxes will be reassessed. I read an article the other day about how they're starting to see that there's a real problem with the tax assessing groups, and that these, you know, um, voted in bureaucrats that are in
Yeah.
the county or whatever are raising taxes because they're trying to keep their budgets going, because they're
Right.
overextended. They keep spending more and more. So they keep, instead of trimming back and being responsible, they just keep raising our taxes to the point that people can't
Exactly.
afford it. And that's creating inflation too. These taxing bodies should not be able to do this. You
No, and
know,
it happened. I just saw something on, in Chicago, on the south and west side. Like their taxes tripled, and
yeah,
they were like, "Wait, what happened? Like, why is this happening?" And it was just their time to be reassessed, and based on this algorithm that doesn't make any sense. And so, I think when you're looking at your taxes, know that you could appeal your taxes. First of all, I don't know if most people out there realize that there is a way to appeal your taxes. If you don't agree with them, go to the assessor, go in front of the board and fight those, because you have to find, there's ways to do it, but to do that. And also with insurance that you brought up, like, talk to somebody, well, I've been with XYZ insurance company for 20 years. I've never looked anywhere else. Well, you got to look everywhere else. You got to do your due diligence. Maybe you don't find anything cheaper or more affordable, but how could you just stay with somebody because you've been with them for 20 years?
right. No, nowadays, especially, what you have to
Yeah.
understand is that companies get bought and sold all the time. And oh, I've been with this company. That company doesn't know who you are. They may not
No,
know who you are. They may not. If it's a smaller mom and pop like Frank's
no.
HVAC, our friend Frank, he'll know who you are. His son will know who you are. They'll take care of you.
Right.
ABC, HVAC, they don't care about you.
No.
They have a corporate strategy and it's that I understood this from Frank actually. Their corporate strategy is, it's $99 to come out on a site visit, but their
Right.
strategy is $500 bill. $500 bill is what they expect to come out of every visit.
Because they're going to
So
tell you
they're going to
something's
find
wrong,
something
right?
wrong. They're going to find
Yep.
something wrong. I'm not trying to say anything, illegal here, but corporations have strategies, and they teach
Yeah.
their people in these classes how to generate revenue. And guess what? It's coming off your back.
It
So,
is.
just understand what you're dealing with when you're dealing with these
And
types
I
of
always
situations.
say the people you see advertising the most, I would say, are the people you need to stay away from the most,
Yeah, it's
because
a good point.
it's not free to advertise.
Yeah.
And do your due diligence. There's ways to find, as you talked about, Frank, a small business owner, he does HVAC, and, he does it well. It's just he doesn't, plaster himself all over social media or the TV. So it doesn't mean that there's not good smaller businesses out there that are reputable that could help you out.
Right. Right.
Right.
That's
And
very true.
then what are some of the ways I see that, we could help our multifamily homeowners? I don't think that until recently it's been brought up to do multi-year leases.
Well, multi-year leases sound like a good deal, but you could end up losing in the long run. But the flip side goes for renters with multi-year leases. They could end up losing by missing falling rates later. However, 1 to 2 year cycle is pretty tight.
Yeah.
So for cap rate valuations, you want to do longer term leases if you can. It's not something that traditionally has been looked on and done in the multifamily sector, but it could be a way to go in this direction now, and you'll get higher cap rates out of having multi-year tenants, right? So if you
Yeah.
have 2 years of guaranteed income instead of one, you're going to be able to demand more out of that property than you would
And as a renter,
typically.
it makes sense to ask for, if you know that you're not going to buy something in the next, 24 months, ask for a 2-year lease.
Yeah, I mean, that's a good way to go. You have to be careful again as a landlord to decide if you're going to do that, especially these
Right.
days, right? I mean, 4 years ago, there was 19% inflation on some of the core components using consumer pricing index. So if you use the CPI index, which I like to use for escalations instead of just 3% or whatever the rate is, like it was 5% 2 years ago, but CPI, consumer price index, and looking at the core products like milk, orange juice, bread, things like that, will give you an
Right.
idea, as well as construction materials, on what the real true inflation is. So you just have to be careful in both situations, whether you're a rentor or an owner. Just make sure you're doing your due diligence. Don't try and jam up your tenants too hard. Tenants, don't try and jam up your landlord too hard. Nobody ends up winning from those
Nobody
situations
wins in that. And what
because
are
they'll
some
just
things
raise
a
your rent in
buyer
three
could do?
years. Well, buyers can refi later, so they have flexibility. So if they get into a multi-year lease, and it's too low, or pardon me, they buy a place and it's a higher rate, and their rents are just basically covering their costs, they can at least refinance. If they see
Yeah.
the trend is coming in a year or two that it's going to go down, like almost definitely under the Trump administration, that's going to happen. They're currently battling on it constantly. You can almost bet your bottom dollar they're going to go down.
Right.
And so now, if you bought a place, pretty well in 12 to 24 months, there's an 80% likelihood you're going to be able to refinance at a better rate. So, that's again, don't sit on the sidelines. Look at the trends, look at the direction of the market, and move now and take action, and you'll benefit. And
Right.
probably in 2 years, when those rates go down, that property value is going to go up. So,
Exactly.
you're going to be in at a lower price. You'll be able to refinance, so you'll recapture that lower rate, and you'll be doing okay financially.
Exactly.
So,
What are some other, as we look at the case study of the 3-bedroom townhouse in Phoenix, for Marcus, the IT worker, 3.5% loan in 2020, couldn't sell it at profitability, so he rented it too. There's just ways of going around
the traditional, just
traditional
do
ways.
something non-traditional. That's what we're talking
Right.
about, just non-tradition, right? So
Right.
traditional is great when everything's stable and going in one direction. We're in a definitely weird period now politically, and so the finance industry is up in arms. They've overextended themselves. We're in a very difficult situation with the commercial bank securities. So you have to look for what short-term stability you can get. You're not looking for 5, 10, 15, 20 years down the road, maybe.
No, you're
You're
just really
looking
looking to
for
right your ship, basically.
1 to 3 to 5 years. Yeah, exactly.
What are some of the challenges, though, when you go from, home ownership to becoming a landlord?
Well, you have more work to do, right? I mean, that's definitely
Right,
going
like
to be part
tenant
of it.
turnover, the repairs,
You're
the
having
management costs.
much more work to do. I mean, not much. It depends on the situation, right? It depends on your property, but you're going to have to do repairs. You're going to have to deal with the turnover from your tenants from time to time. So you got to plan for that. You need to be checking with them 3 months out. Are you going to stay here? Are you going to be re-renting the property, etc.? And then management costs potentially. So if you're living out in the suburbs and you had this condo that Marcus did, for your example, he got the deal at a great rate. He didn't want to sell it. And now he's living out in our neck of the woods, Schaumburg, right? 20, 30 miles out. You might hire somebody for 5 to 6% of the rent to manage it for you. So you're going to have different higher costs as well. So, but nonetheless, you can be profitable. So a trapped home can become an investment with the right adaptation. So you don't have to feel trapped. You just have to think about it differently. And that's what we're here to help you do, right?
What about, and I know this is something it just came up when I was thinking about it. Um, you have a multifamily home. Your tenant is, the lease is up. For the landlord, I know you do this, so that's why I'm asking the question. Going into being an Airbnb instead of just a traditional
Yeah,
rental.
another great example, Stephanie. Airbnb, or shared housing, it's really called.
Yeah.
I don't like to use Airbnb because it's like Kleenex, and I'm not so thrilled with those guys either. I mean, I do love Airbnb, but there's some. I guess it's a nascent product and it's
Right.
evolving. We shouldn't be too hard on it.
I mean, there's a lot of different ones out there now, but just
Yeah,
what would
not a
you,
lot. Well, there are actually quite a few, but for a typical home, I think you got 2 markets that you're going to go to.
I guess, give an example of what a traditional rent would be and what you could get when you're doing a shared
Yeah,
home.
yeah. I'd say a good example would be a 2 bedroom, 2 bathroom apartment renting for in a lower level, maybe a couple steps down. Rent would probably come in around 2,200 to 2,400,
Okay.
and you can get 38 to $4,000 a month. Now you do have to pay for the furniture. That could be
Right.
15,000, $20,000, but you're getting that paid back in the first year pretty quickly, right? And then
Right.
you have to keep it going out year after year. You're building upon that. Now you do have to replace this stuff too, though, and you get a lot more wear and tear, but you're making almost double the rent. So those are the benefits, and that's a very creative way to make the most out of your situation. If things are getting tight, become flexible,
Yeah.
right?
And like you, I mean, you could do both, right? You have one traditional renter
Right.
and then you have one Airbnb. So that's what we're like really talking about. Like, you got to be, opportunity is knocking, be creative in your response, because if you're not creative and you're just looking for someone else to make your decisions for you, you're going to miss out.
Yeah, and I will tell you this too. That's a great point, Stephanie, because when I bought my building back in 1998, I didn't want any problems, and so I invested fully and I gutted the entire place. And now, knock on wood, 20 years, more than 20 years later, 27 years later, the property is still in beautiful condition. It's doing really
Right.
well. And I'm making more rents than ever. I built it so each of them would be a condo. There was one furnace in the lower level that took up a third of the unit, or maybe a quarter, 25% maybe. And I tore that all out, and I made each one have their own HVAC unit. I did all new plumbing, all new electrical, all new drywall, all new insulation, and now the house is just fabulous. It's 27 years later. So it cost me, back then, I think it was $125,000 to do the rehab. Today it would be $900,000. Today it would be, easily $700,000 to $1 million for this rehab that I did. So I'm benefiting from that right now. So
make sure you have good bones.
Yeah, that's the long game you want to play, right?
Right.
You want to be thinking.
And I think that's what our listeners, what we're trying to get across is real estate is not a short game. If you're looking for, a short game, a quick fix, to me, like investing in Bitcoin is, it goes up and down by $40,000 a day, whatever it is. You have to see opportunity from a neighborhood to a situation, or you could see where the trends are going. You have to do your homework in real estate. You can't just go, oh, I want to do this and jump in and buy at the high end. You have to buy low, wait for it to come up, and you have to kind of do your homework. If you're not doing your homework and jumping in, and like we said about these appraisal gaps that people are signing, you're underwater before you even got the house.
Yeah. I mean, waiting is risky too, though. You don't want to wait, and holding, you have to adapt. Should you wait for rates to drop? I don't believe so. I think it's risky. I think you have to operate now and then refinance later, because you don't know what direction it's going to go. You still don't know. Bankers don't know either. If rates fall, and here's the other problem. If you wait for rates to fall, then competition spikes. All of a sudden, everyone's like, oh, we have to jump in the market. All this, there's a lot of money sitting on the sidelines right now.
Exactly.
So, you can hear it from the people on MSNBC, et cetera. People are not investing because they're waiting for things to stabilize. So if you wait, rates fall, competition spikes, and prices rise. So it's better to negotiate concessions now and then refinance later. So get into it at a good deal or a comfortable level for you, and then be ready with your plan B as the landscape shifts, right?
Exactly. And I think that, what we wanted to get across in this episode especially was that, rates are not going to come down like tomorrow. Prices are not going to come down tomorrow. But if you do your homework, there's opportunity out there. And, there's always opportunity when you look at it and you have to do your homework. And I know you love AI, and you could plug a bunch of stuff in AI and get some, cool statistics about what's going on. So gives you a little bit of a head start of what you need to look for, what trends are out there, but still have to do your homework.
Yeah. Look, AI, I do like it. I'm getting less, enamored with it lately because as they build on these models, it's getting more complicated, more cumbersome, and less reliable. I'm hoping that's going to change, but the last version of ChatGPT is just not great. So I'm having bad experiences with it, I should say. So anyway, use those tools, but they make mistakes a lot. I've been through lots of mistakes with ChatGPT. So, just be careful using those tools out there. Double check their work. And by the way, we're going to give you a tool, rent versus buy calculator. So you'll have that in there in your toolbox to help you make these decisions. And again, send us your rent versus buy scenarios also, please. And let us know what your situations were. And we want to know the good and the bad too. I've told you my good stories. We've come up with some scenarios of good and bad to kind of give you some context for how to think about it. Stephanie's had good experiences and bad experiences. So, you jump, like her bad experience was jumping out too quick, right? She actually did a great job of rehabbing this place and getting it ready, but then this emotional thing screwed it up. So you gotta.
Are you saying I'm emotional?
No, life is emotional.
No, I'm just kidding. Yeah, I agree.
Your real trauma comes out of podcast pause.
What did he say? What'd you say?
Podcast a pause.
You know what? All you people can just, you know what, and you know what.
Anyway, this is before podcast a pause, and I'm not picking on you. I'm just giving you a scenario.
Anyway,
emotions come into things. So
yeah, and well, in real estate, emotions are huge.
No, they are not.
They are.
That's why
and residential people are crazy.
I am a commercial broker because I don't want the emotion. That's what I'm telling you. It's easier to remove the emotion. I don't care what color the bathroom paint is or the tile in the kitchen. It doesn't matter. Will it rent for this much money to somebody who wants to live in a place with that?
Okay, well, on the other side,
in that neighborhood,
people are emotional and everyone's emotions get high, and then the lawyer's emotions get high, then the broker's emotions get high, and everyone's like sitting on their like psycho ward. Why is your face so big?
Because this is why you're in commercial real estate, not residential.
So what else is on the agenda in Door County?
Well, all the trees are cut since we've been sitting here trying to make this remote podcast work. They cut all the last 3 trees. I'm really bummed out.
You bummed out that you didn't get to do that?
Yeah, I love cut. Yeah, you'll see the video. It's a lot of fun.
Okay, we'll put it on the website.
But I'm going to rebuild my son's car because children these days don't know how to do anything. At least building cars.
I told you my story of my son and his 3 friends at the high school. My son's car's battery, because he left the lights on. Shocker. I had to teach them how to jump a car. Yeah. And all these dads are like, do you need help? I'm like, nope. They're going to figure it out. They're like, the car's going to blow up. I'm like,
who put
the dads that were driving by. They're like, can we help you? I'm like, no. And then I said to Danny and his friends, I said, okay, now put the red on the red positive and the black on the negative. And they're like, well, how do we know? I'm like, it has a red cap.
It's red
and black. And then they go to turn the car on. They're all like sitting there like it's going to explode. I'm like, oh my God. I'm like, what would you guys do if I wasn't here?
No, it's worse.
Some dad would help us.
We're talking about this and I'm joking about my son. I wish he knew and I wish I taught him, but our cars are so difficult these days. My Audi is a nightmare. It takes
so what do you have to do to Brett's car?
18 screws to take off the cover. Well, hang on. So we're talking to my friends from Houston who are up visiting here, and they have a real problem when people go to the grocery store or any store and the computer isn't working. The kids that are servicing you can't give you change.
They don't know what to do.
They don't know how to handle it. They don't know what 365 is, and you give them a 5. They don't know to give you $1.35 and change. They might not even know what the coins are. So it's a real issue.
It is.
But anyway, so I'm doing the suspension, the brakes and the rotors, and the steering stabilization, the sway bars and the.
Is Mike helping you?
Mike Gastrowski, who's in from Houston, is helping us, and Dean Stanley, of course, the mechanic.
Well, good luck with that.
Frank from Frank's HVAC is helping us. So I'm in good shape. These guys know how to build things, although they all have new cars, except for Mike Wells is constantly building new things. So
Mike knows everything.
Back to our key takeaways. Rates and rents are both high. There's a squeeze going on. Renters have to negotiate leases. Buyers are looking for concessions and refinancing later in this market. That's a fine way to go. Investors focus on yield, not on speculation right now. So try and get the most money out of your investments. We're going to give you some tools here to help you kind of do your best and do the mortgage versus the rent calculator. But please keep things reasonable. Your mortgage is flexible and adapt to the market shifts as they shift in the future.
Exactly.
And send us your stories, send us your comments, and thank you for listening. And thanks for participating. DM us. And thanks for participating in our first remote session. I think it's a huge success. Feels like it's great. Thank you to Matt and to Mike for making this happen, guys.
Yes, Sonic Palace, our proud sponsor of the Show Me How podcast.
That's right. And Mike Penny, our fabulous producer. So thank you guys very much for everything you've done. and we'll see you live next week, maybe.
All right.
All right.
See ya. Have fun out there.
Thank you. Bye, everyone.
Bye.